Hey everybody, it's Pete. Good morning and welcome to a new episode of Stocks for Breakfast. I'm so happy to be here with you today. Thank you so much for joining me. If you find these videos helpful, and especially if you find them profitable, please click down and subscribe to the channel. That would mean the world to me. Today we're going to talk about something that is, I think I'm going to actually kind of call it a trading secret. Day trading, excuse me, maybe even a day trading secret, swing trading secret. We're going to use day trading as an example, and there's an infinite amount of energy, I believe, wasted on getting the perfect entry. If there's one secret that there is in trading that professional traders know that newer traders or struggling traders even just for whatever reason don't understand, maybe just because they weren't told, so maybe I'm telling you today, is the entry. While it's important, it's not as important as the exit. And I think a lot of you probably know that simply because I'm sure that there's been plenty of trades where you got in, you had the big fish, and you got out at the wrong time. No other way to say it. You had a good trade and you didn't make what you were supposed to on it, which actually I want to talk about that in a minute as well. By the way, if you'd like to do all this stuff together in real time, we actually see my trade entries, we walk through the trades together. Click down and join the boot camp. It's the most incredible investment that you could make in yourself for over a 30-day period. It's practically a 30-day seminar that we trade in real time together. So click down and learn more about that below. But what I want to talk about is what happens between entry and exit is really where the money's made. Now, we spend a lot of time talking about the most important part of trading, or I should say where the conviction, the absolute audacity to believe that you could make money happens before the trade. That is setting up the idea. That's what we're known for. We're known for order flow. We're known for reading the tape. But then that last part is actually being a trader. And a trader manages risk and manages profits actively. They don't just sit back and be like, oh, I hope it moves in my favor, or I hope it comes back. and all of a sudden it either does or it doesn't. And the problem with that is you're taking yourself completely out of the equation about whether or not you make money on that particular trade. And if you do that over and over and over again, you're essentially telling the market, please do me a favor and help me make money today, as opposed to, I expect to make money because I'm in charge of whether or not I make money. We actually had a pretty good conversation last night in our weekly group coaching call, and I wanted to highlight one of the main points that we made last night because I think it's really significant. I think it matters a lot. But what I want you to write down now is what happens between entry and exit is where the money's made. Now, prior to the trade, you set up good ideas. If you're regular subscribers to the channel, you know that we have A+ trades and then everything away from an A+ trade. But you could still have an A+ trade and not make money on it if you don't manage it properly. Now, generally speaking, we talk about the exit portion of the trade where a trade's not working, and without getting into the details today, because we kind of keep that in the boot camp, you have to learn to work your orders. You have to learn to massage the trade when you get in and around whether it moves in your favor or not. And you need to know what you're going to do prior to the trade. I think one of the biggest misconceptions about that newer traders, that retail traders have coming into the business, is that for some reason they believe that they want to get the exact exit. They want to get the exact top of a trade. And look, it's very hard to do. It's much easier to just look at your stop loss and be like, and have complete confidence. Bam, I'm getting out there, right? Or I'm going to work the order. In our community, we talk about scale out, get out, set alert, and get back in. But the profitable side of the trade, let's say you did a good job setting up a trade and it starts moving in your favor. Then the next question comes down to how aggressively should I be looking to build that position? How aggressively should I be looking to hold that position? And it really comes down to the most simplistic, mind-numbing, easy answer on the charts. And I'm going to show you that in just a second. But I want to touch on something that is kind of sometimes, I don't know if it's getting lost or if it's just not being considered. Prior to allocating money to the market, you need to know what kind of trader you are. You need to know what your expectation is to make money. It's kind of like if you open a business, you need to have an idea of what you expect to make. You have to have an idea of what inventory you have and how much money you could make on that inventory and what's a good profit for you. And especially at the beginning part of your business. And just paying the bills at the beginning part of the business can be exciting because you're an entrepreneur and you're doing well. And then as you learn to run the business a little better, you can get a little bit, you can hold a little bit longer, you can trade a little bit more aggressively, get bigger inventory, so to speak, right? So in my world, in the way I trade, and this is the way I've been trading for a long time because it was essentially the way I was taught. I was originally a prop trader back in 2000 and eventually learned more about active trading. My window is a 4 to 6 day window. I'm looking for green candlesticks if I want to be a buyer 4 to 6 days in a row on the daily chart. And then I'm looking for the next trade because there's generally speaking, when prices move up, pause, and then roll over for a pause, and then take off again if they happen. And I'll look to put on the next trade, but I'm always looking for my money to be working. I want maximum cash flow every month. I want to see my account go steadily and I'm putting my money to work. So that's the exit portion of it. That's my world. That's kind of like my matrix of booking profits. I see a lot of newer people coming into the boot camp only saying they want to make money, but having zero idea of what a profitable trade looks like. For example, we had somebody yesterday who had a 600% profit on a trade and wasn't sure what to do with it. Well, I told them very clearly what to take the money. Take the money and run. If you make that much money, if it's a windfall profit like that, that's not easy to do. If you did everything you were supposed to, you lined up the trade, everything worked out and moved in your favor, 600% is a lot of money. How much more do you think you're going to possibly make on that trade in a normal market environment? So again, I'm not saying to limit your profits, but you need to know what the window looks like that you trade in. If you're day trading, what does that day trading window look like? And I'll give you like a super example. When I first started trading, we used to do what was called scalping teenies. We would buy in, and this is when things were in fractions. You'd buy in the bid at $20 and sell it at 20 1/16. Buy it at 20.5 and sell it at the next level. And that was our entire world. You try to buy at the bid, sell on the offer, and you do it as many times as possible. I don't do that anymore. That's why I have all this gray hair. It's exhausting. But now what I do and what I teach in the boot camp is what I believe is the least stressful way of doing it, which is finding good ideas in the higher time frames, finding ideas on the daily, weekly, and monthly charts, and then just simply sitting back intraday or even as a swing trader and just looking for entries and managing the position. You're really just managing risk, putting on shares, taking shares off, managing risk, and the nirvana, the heaven that we have in the markets these days where there's practically zero commissions. There's really no reason ever to hold a losing trade that you've identified as not working out. So again, that's the secret between entry and exit. But then what about profitable entries? What about profitable trades? What about the type of entry and how aggressive should that entry be? And I'm going to use just a quick example here, but I want to just give you something to think about. What is a reasonable profit for you? What is even if you say what's an outrageous profit, you still need to have some sort of mental model of where you think the market's slowing down and topping out. If you believe the market just continues to go all the time and you're going to hold it forever, there's nothing wrong with that. But then you can't be watching these little 5-minute and one day candles if you plan on holding it for the next year. Those are really insignificant. But if you plan on buying at 9:30 in the morning and maybe getting out at 4 o'clock, then you're going to have to massage the order a little bit like I do as an active trader, where I'm just looking to really maximize my cash flow every day, every week, and every month. So we actually discussed a chart last night that I kept going back to it because it just so perfectly illustrated how aggressive you should be on your entries and how you can expect follow through on those trades. And I'm going to go to the chart right now because I think it'll really be eye-opening, actually. So we're going to take a look at our buddy DocuSign over here, and we're not really going to look at the whole picture. We're going to look at this picture, and this picture. And if you're not familiar with the stock has been very strong for the last year. This is what the stock has done. We call the tape is now changing because the picture is changing a little bit. So let's just identify the fact that we want to be a buyer of this stock. And what you can notice here, and especially if you're a regular subscriber to the channel, these candles are what we call well bid, where we have higher highs and higher lows, which means the smart money is allocating more buying to push the stock higher, and they're supporting higher lows. So that's a good situation if you want to be a buyer. It's just one tiny piece of confirmation that we get to say, okay, if I want to be a buyer, what do I need to see? And the stock continuing to be well bid is a situation where you can say, I can be a little more aggressive right now because the smart money is telling me they're buying right now. And as long as I see that to be the case, I'm going to buy with them. So again, I talk about it a lot. All I'm looking to do is piggyback the smart money. I'm not looking to go and find some penny stock that maybe eventually something will happen. I'm looking, it's right now, it's happening. I don't have to guess. Right now, the smart money from one day to the next here in this window is buying stock. And there's no other way to put that. There's higher highs from day to day, higher lows from day to day. So intraday, especially if you're a day trader, like I said, this could be a day trading secret. You can be a little bit more aggressive with your share size. You could enter a lot quicker without waiting for too much confirmation. But now let's take a look with this same strong stock that's pulling back now. So as it's pulling back, you're still saying to yourself, well, I like this stock. It's a strong stock. I'm going to start looking for an opportunity to buy this stock during this pause, which also this kind of cool picture here where you can actually see this is literally the 4 to 6 candle window that I normally look for. So I'm looking for it, and then I'm looking for indecision candles for it to slow down. Then it pulls back, and I'm looking for indecision candles for it to slow down and start again. So we have this window here where it's well bid, this window here where it's well offered, this window here where it's well bid. So you see, just looking at the daily candlesticks without knowing everything we teach in the order flow masterclass, you should have a very quick eyeball of like, okay, I have the minimum criteria to feel confident about this idea. But let's say it's this window here where the daily candlesticks are what we call well offered and going down, but you still want to be a buyer of the stock. Let's say that you get the same exact entry signal, which we use the same entry signal over and over and over again. We keep it simple. This is different than this. So when you get this type of price action in a stock that you absolutely want to be a buyer in, you might need what's known as a little bit more conviction. You might need what's known as a little bit more proof in the idea, even though you're using the same signal, but it's a different situation. And that's really the point that I want to bring up today that I think is kind of important, because you can have the same exact entry signal in the same exact stock that you want to be a buyer, but last week's price action is super bullish, and this week's price action is longer term bullish, but right now going down. Using that same entry signal, you can still enter the stock, but you would just work the order a little bit more, which means that you don't go in with your full size if and when until the stock eventually turns around, and then you can get aggressive again. So I think I talk about this a lot, where it's like, you know, again, driving a car. Yesterday, the road was open and you were doing 65, 75. You were there and it was boom, all green candlesticks, right? Today, you're in stop and go traffic, same exact road, but stop and go traffic, same steering wheel, same brake, same car, same gas pedal, right? You're going to use it differently than you used it yesterday because it's literally the same stock but a different road, right? So if you, hopefully this just really lights up the minimum thought process of what you need to understand prior to putting on a trade, because you have to say, okay, I love the stock, but is the situation perfect? Is the situation really good? If it is, we just walk through how to get into that trade. And then even the next step is how long do you plan to hold it? If it's a perfect situation, you can expect to hold it a little bit longer. You're not going to worry about all the wiggles and jiggles and the 5-minute pullbacks and maybe even a daily pullback if it's a swing trade, if the bigger picture looks really good. But when the tape changes and the story changes, where you start to see melted candles, maybe you start to see it pause, that you could still buy the stock, but now you're going to buy it differently. You're going to use the gas pedal differently, use the brake a little differently, because again, same stock, same road, different situation. Hopefully this just gives you a little bit of insight into a lot of the stuff that we do in detail in the boot camp. And if you're in the boot camp already, congratulations. You know, we go over this every day. If you're not in the boot camp, make that investment in yourself. I think that you'll find the next 30 days to be really powerful for you. Thank you, everybody. Have a great day.